The screen glowed green. Numbers climbed just as you predicted. You felt smart, powerful, in control. Finally, a trade to erase your past losses. The market moved your way, confirming your analysis. You imagined the profits, the victory. Then, suddenly, a sharp reversal. The green numbers flickered red. Your heart skipped a beat. It's just a pullback, you told yourself, gripping the mouse tighter. But the red grew, devouring your profits and capital. Panic set in. Your plan, your stop loss, forgotten in a desperate hope for a turnaround. The price kept falling. You finally closed the trade, not out of strategy but pain. The loss was bigger than planned. Silence filled the room. You felt foolish, angry, defeated, like the market had made a fool of you. This is the first lesson every trader learns. The real battle is inside your own mind. Hope, fear, regret. These emotions have nothing to do with charts and everything to do with human nature. We come to the markets dreaming of freedom, but we're unprepared for the psychological warfare. We think we're fighting the market, but really we're fighting ourselves. Our brains are hardwired to react in ways that sabotage trading success. Understanding this internal conflict is the first real step toward winning. Our brains evolved for survival, not trading. They're built to seek pleasure, avoid pain, and follow the group. Instincts that once kept us alive. But the market is a different jungle. No physical threats, only uncertainty and probabilities. Our ancient wiring struggles here, applying old survival rules to a new game. The fear that saved us from predators now makes us sell at the worst moments. Trading demands calm risk acceptance, cutting losses, letting winners run, actions that feel unnatural. Our brains crave certainty, but the market offers only probabilities. The real challenge isn't learning a strategy, it's unlearning instinctual responses. We must override fear and greed, training ourselves to think counterintuitively. In trading, we're up against our own psychology. The market is a mirror, exposing our weaknesses. To succeed, we must first conquer ourselves. Loss aversion is a powerful bias. Losing hurts twice as much as winning feels good. In trading, this bias is devastating. When a trade goes against us, the pain of loss triggers panic. Most hold on to losing trades, hoping for a comeback, telling themselves, it's not a real loss until I sell. This denial turns small losses into catastrophic ones. Discipline shatters when trades go red, stop losses are moved or removed. It's not logical, it's pure emotion, a primitive fear. The market punishes this lack of discipline. To overcome loss aversion, we must see losses as business expenses, not failures. Small, planned losses are part of the game. Like a casino owner paying out jackpots, traders must accept losing trades. Accepting losses strips them of emotional power. Execute stop losses with detachment, it's just part of the process. This mindset is essential for survival. FOMO, the fear of missing out, is a powerful force. Watching others profit triggers anxiety, rooted in our social instincts. Our brains see missing out as a threat, urging us to jump in. Dopamine fuels this urge, making the anticipation of quick profits addictive. FOMO trades are impulsive, not strategic. They're gambling, not trading. We buy late, near the top, and become exit liquidity for disciplined traders. Regret follows as the price drops. The antidote? Patience and a strict trading plan. Only enter trades that meet your criteria, no exceptions. This discipline blocks emotional impulses and empowers logic. Let opportunities come to you, not the other way around. We're social creatures, wired for herd mentality. In life, following the crowd often keeps us safe. In markets, it's a recipe for disaster. The herd is euphoric at the top, panicked at the bottom, always wrong at turning points. Bull runs create pressure to join in, masking risk with false security. Crashes trigger mass panic, making opportunity feel dangerous. Following the crowd means buying high, selling low, the opposite of success. Winning traders think independently, relying on their own analysis and systems. Have the courage to act against the crowd when your plan says so. Don't blindly oppose the herd. Trust your tested strategy. Your trading plan is your anchor in emotional storms. It keeps you rational when the crowd loses its mind. Independence is your edge. Most traders lose not because trading is impossible, but because they fall into predictable traps. Emotional trading, letting fear and greed dictate decisions, destroys accounts. Beginners lack structure and documentation. Without a trading journal, they can't learn from mistakes. Poor risk management is fatal. Risking too much on one trade leads to ruin. Over-leveraging and chasing losses compound the damage. Confirmation bias seals their fate, as traders seek only information that supports their views. This echo chamber blinds them to warning signs. They're not analyzing objectively, they're just looking to be right. Avoid these pitfalls to survive. To thrive, you need discipline and process, not hope or luck. Start with a rule-based trading strategy. Define your edge, entry, exit, and position sizing. Your plan is your boss. Follow it without exception. Keep a detailed trading journal. Log every trade, including your emotions. This feedback loop reveals patterns and drives improvement. Risk management is your shield. Never risk more than 1 to 2% per trade. Small losses protect your capital and your mindset. Mindfulness helps you observe emotions without acting on them. Backtest your strategy to build confidence in your edge. With data and discipline, you can weather losing streaks. These tools turn trading into a process, not a gamble. Winning traders don't chase certainty, they think in probabilities. A setup isn't a sure thing, it's a chance with defined odds and risk. This mindset detaches you from single trade outcomes. Losses aren't personal, they're just probabilities playing out. Focus on consistency, not home runs. Execute your edge repeatedly. Discipline matters more than being right. Satisfaction comes from process, not random wins. This approach builds resilience. Winning traders endure losing streaks without breaking. Their foundation is a statistical edge, risk management, and a probabilistic mindset. They don't get euphoric after wins or depressed after losses. Emotional equilibrium is their ultimate edge. Trading becomes a boring, repetitive business. And that's the secret. Resilience is built through process. Trading isn't about conquering the market, it's about conquering yourself. The real journey is retraining your brain to thrive in uncertainty. You'll confront fear, ego, impatience, and greed. The market will show you who you really are. Transformation takes time and conscious effort. Every disciplined decision rewires your brain for success. See trading as a professional discipline, not a get-rich-quick scheme. Success depends on discipline and mental control, not intelligence or desire. Embrace the challenge. The market is your greatest teacher. The rewards go beyond money. Discipline and resilience benefit all areas of life. The path is hard, but mastery over your mind is the ultimate prize. Start the work now. Your journey begins here.